Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thanks for making time today.
Happy to be here.
Well, let's start on Wall Street, where stocks last Friday ended with a sharp rebound on expectations that the Fed might slow this tightening cycle, the pace at which it's raising interest rates, close to 2.5% on the Dow, close to that on the S&P and the Nasdaq as well. What's the story in the global markets as we start a new week?
Okay, well, last week was a real roller coaster ride for the U.S. stocks. On Monday and Tuesday, the stocks fell. Wednesday and Thursday, rose on Monday and Tuesday and fell on Wednesday and Thursday, but it rose again on Friday, and all indices ended up positive for the week. For the week, Dow went up by 4.9%, S&P up by 4.7%, and Nasdaq up by 5.2%. Now, the reason that they had such a roller coaster ride was there were factors which spooked the market as well as optimistic signals. The factor which probably spooked the market most was that 10-year Treasury yield hit the highest yield since 2008, and also the third quarter earnings reports are beginning to come out, and some of those numbers do seem a bit shaky. So it does seem like the U.S. economy may be heading toward a slowdown or a recession, but there were some optimistic signals as well. More bipartisan economists are concerned that Fed may overshoot the interest rates and cause a recession, so they're advocating slowing down the rates of increase. And right now, the opinions of economists differ whether the recession will be light or serious. Oil prices and gas prices seem to have stabilized. The price for West Texas Intermediate is right now about $85 per barrel, and the price for natural gas is about $5 for a billion BTUs. That is considerably less than where it was just a few months ago, and the prices seem to be stabilizing even though OPEC had threatened to cut supply, and Russia has threatened to cut supply. But there are still some serious problems. The U.S. core inflation is still rising. The job market is still strong. There's a lot of job creation and increase in wages. And spending, while there's some mixed evidence, it seems to be still strong. The credit card companies, Bank of America and American Express, during congressional testimony said that they do not really see reduction in credit card spending, at least for their companies. And then there seems to be beginning of somewhat perhaps an irrational optimism that the Fed will reduce the speed of the rate increases. Right now, the signal seems to be fairly strong, and market seems to accept that the next November increase will be 75 basis points. December, they're optimistic that it might be 50 basis points or lower, and that seems to be causing this general optimism in the stock market. But year to date, Dow is down 15.04%, S&P is down 21.76%, and Nasdaq is down 35.01%. For the Asian markets, Nikkei is up slightly, but Shanghai and Hong Kong is down significantly, though the trading day is not yet over. This seems to reflect what has happened in the last few days in Japan and China. In Japan, on Friday, there seems to have been a surprising intervention by the government on the currency market, they had halted the depreciation of the yen for a while, but today the depreciation of the yen seems to be proceeding again. For China, they had a 20th Party Congress. They did have some economic issues like what the Communist Party thought the future industries for China should be, but still, they perhaps did not have enough details, so that disappointment seems to be causing the drop in the market today for Shanghai and Hong Kong. And for EU, the DAX and CAC are up at the beginning of trading. FTSE is a bit down. United Kingdom is in a bit of an economic mess right now with the problems in leadership as well as inflation rate at 10.1%. EU, the inflation rate, the latest for September, is now set to be 9.9%. So they will have to deal with some interest rate increases during the next Bank of England and EU Central Bank, Eurozone Central Bank meeting.
Right. Well, with other Asian markets down today, Korean stocks were actually up strongly in the beginning of the session, a little tapered those somewhat by the end. A strong showing for Samsung Electronics and similar gains for battery makers, LG Energy Solution, Samsung SDI. Financials were lower. Tell us about the domestic market, Professor.
Well, last week as a whole, Kospi didn't really do much. It only went up by 0.03%. Kosdaq was actually down last week by 0.55%, but today, as you mentioned, it made a fairly strong recovery. Kospi was up 1.02%, ended today at 2236.16. Individuals sold and institutions and foreigners bought. Kosdaq went up by 2%, ended today at 688.50. Individuals sold and institutions and foreigners bought. The big news in the Korean market seems to be a hope that foreigners are returning to the Korean stock market. They seem to be buying up IT stocks, Samsung and Hynix, and EV battery stocks. The stock market does not seem to be that much affected by the problems that we're having in the commercial paper corporate loan market, where government has just pledged more than 50 trillion won to assist possible shortages in funds going to short-term funds going to these companies, but stock market seems to be weathering that problem and not really paying too much attention to it. Year to date, Kospi is down 25.18%. Kosdaq is down 33.66%.
Well, now to zoom out a little bit, Professor, the strong U.S. dollar a concern for many countries, especially here in Asia. Some analysts are still saying the Korean won is likely to touch 1,500 against the dollar before the year's out, and that, they say, makes it more likely that we could see a business contraction in industry. What do you make of the situation, Professor?
Okay, well, within the last couple of weeks, the Korean won seems to have stabilized. If you just look at the last month, Korean won lost about 1.32% of its value, and that's less than Chinese yuan, which lost 1.83% of its value, euro, which lost 1.5% of its value, Japanese yen, which lost 4.06% of its value. So Korean won seemed to be reached some kind of a stability level, but what is somewhat concerning is that we may see what happened back in August happening again for the Korean won, the Bank of Korea, and the FOMC. And the reason is that Korea's last monetary policy meeting for this year is scheduled for November 24th. The U.S. FOMC meeting the November meeting comes a bit earlier, November 2nd and 3rd, and then they have one more meeting this year, December 14th and 15th, and then they have a meeting next year scheduled for January 31st and February 1st. Bank of Korea has not yet announced the Monetary Policy Committee meeting schedule for next year, but the reason that this is somewhat nervous for the market is that, well, right now the market expectation is that the Fed will raise the rates by 75 percentage points in November 2nd and 50 basis points in December 14th and 15th. But there has been growing market optimism that perhaps the Fed will slow down the rate of increase. What happened in July was that there was a similar perhaps irrational optimism that the Fed will slow down the increase of interest rates. So Bank of Korea raised the interest rate perhaps less than it should have. Instead of raising it by 50 basis points, they only raised it by 25 basis points. And then the Bank of Korea was caught by surprise in September when the Fed took a much more aggressive path. And while the Bank of Korea was expecting 3.5% U.S. interest rate at the year's end, the Fed has announced that they were going to have 4.5%, and that was probably the major reason why we saw such a fast depreciation of the Korean won in September. Now, will the Bank of Korea make a similar strategic error this time? Well, I think there's a stronger case to be made that the Fed will go on a slower growth path, but it's not something that's completely sure yet. The fact that the Korea does not have a monetary policy meeting on December, I think is going to hurt Korea, especially if Korea decides not to raise the rates that much in November. In this case, it may be justified, maybe a special meeting in December by the Bank of Korea, so that if the Fed becomes more aggressive than expected on interest rates, they will have a meeting in December where they can adjust the interest rates. But we'll have to see whether the Bank of Korea will take such a drastic step, but that's what I hope will happen.
All right, a lot riding on the next few months, Professor. We'll have to keep you on every week to keep us apprised of all that. We'll have to leave it there for today, though, Professor. Thank you, as always, for coming on the program. We appreciate your insights.
Thank you.